Okay, everything is good. All right, guys. So this is the agenda for today. So you really see that today we want to cover the Fibonacci projection. So basically, agenda for today: what is Fibonacci projection? Okay, how we're gonna use projection method for correct move. How we're going to use Fibonacci projection for planning. Okay, and live example. Okay. Let me adjust my screen a little bit. Okay. So what is Fibonacci projection? Okay, we have covered Fibonacci retracement, Fibonacci extension, I think last week. Okay, just a quick recap. Okay, Fibonacci retracement, we have what level, guys? 23.6%. I'm gonna open the trading wheel. 26.6%, 38.2, 50%, 61.8, and 78.6%. That is Fibonacci retracement, right? Fibonacci retracement also acting as a support and resistance. And we use Fibonacci extension is the same too. Whatever price go beyond, okay, the starting point, which is 100%. Okay, that is gonna call Fibonacci extension. And commonly used Fibonacci extension, we use 127 and 161.8 for Fibonacci extension. Okay, and today we're going to cover Fibonacci projection. Okay, so Fibonacci projection is just similar to Fibonacci extension. It's just for price estimate too. Okay, like we're going to kind of like forecast where is the next likely price move based on the historical swing data. Okay, um we're gonna use like a price like a swing, like swing high and swing low, which is with what I'm gonna say. Okay, here we're gonna use the prior impulse and this treatment to calculate the projected distance. Okay, we're gonna use after retracement, which is projection. Fibonacci retracement and extension will need 2 point at point one and point two, and then you pull Fibonacci, right? This is a dose of Fibonacci level. Okay, this is starting point, which is 100%, and then ending point is 0. Is extension, if price go close above the 100%, this gonna be Fibonacci extension, which is 127 and 161.8. Okay, but for the projection, you need to apply one that B to C is formed, meaning that this is going to be A, right? This is going to be B, and then you see the C. Then you're going to use Fibonacci projection, okay, to complete the move. Uh, Momentum resumes, okay. Don't get confused. I will show you guys in the rule chart later, okay. Okay, here. So ABC structure, okay. ABC structure, which is basically you look for the zigzag. Zigzag is just like, zigzag, and then you're gonna do the projection, right? This is called projection. So, I clear first. Okay. For the point E, this is gonna be your impulse, the move. Okay. One, you see the pullback, okay, which is retracement, right? Which is this is your starting point, which is 100% Fibonacci retracement you use, okay, and this is 0. One price is pullback. Maybe this one, maybe half of it should be like 50% for retracement, okay. You have A, B, and C. One is pullback. You're going to project the target where the next price likely to move from C to D, okay, and you can use the projection. You see, you may confuse it. What Peggy talking about? Okay, come on. I'm gonna show you here. Okay. Ui, it's here. Okay, this are like last week. These are our our setup for gold last week is still ranging. Okay, so now, right, A, B, C, which is here, for example, if I'm gonna find, we're gonna use Fibonacci retracement, which is like just say point 1 to 2, and then you can see that, okay, this one is retraced about, let us say, 78.6%, right? We already got A, B, B, and then we got C, right? So now we're gonna use what is about D, right? So you use Fibonacci projection, which is in the trading wheels, okay, they are or the trend-based Fib extension. So this Fibonacci projection, which is here. Okay, so you draw from point A, B, and then go to C. Okay, of it is here. So we should use 61.8%, 7.6. This is 100%, okay, because this is starting point, right? This is 100%. And then we're gonna use another one is 127 and 161.8. And you can see that from A, B, and this is C, you can see that they almost hit 61.8% and then bounce. But in this case, I would say that 8.6%, then you can see the projection, meaning that you want to sell from here, this one price likely might move to 127 and 161.8 if they go below 100% projection. It is similar to extension, right? Extension, okay, I'm gonna move back, right? And here, right? Extension. So you can also use extension form. This is your starting point and this is your ending point, right? Extension. Extension where is here, right? Starting point, ending point. Okay, so basically those Fibonacci level it act at the support level. So we kind of okay if price falling to 61.8% or 78.6, then you're gonna see the bounce or like reverse from here. But in this case, you can see it's all the way break and where hit your Fibonacci extension. Hit your Fibonacci extension. I'm gonna use the protection as well. So where? If you're gonna do like that, so this is gonna be your zone. The price likely might bounce from here because we have Fibonacci extension, we have Fibonacci projection, and then you can see when they come to the area or the zone, you can see the rejection. The first kind of react at the projection 127, 127 somewhere around here, right? You see that 127 Fibonacci projection. Okay, so you need to look for A, B, and then you project C, or you look for those like zig, zag, boom, something like this. All right, guys. You still confused? Please let me know. Okay. So different retracement and Fibonacci extension, we need 2 point, 1 and 2. Fibonacci projection, we need 3 point, 1, 2, and 3 to project 4 or A, B, C to project D. Okay. So we call ABC structure, okay? So visualizing ABC, and then you're gonna find D, which is I already show you guys, right? So here, A, pull back, and then we're gonna project to get D. You have 1, 2, 3, 1, 2, 3, and then you get 4. Or you get A, B, C, and then you get D. Okay, you need to have at least 3.123. Okay, the core principle for the projection is that market often repeats similar move size. Projection assume next move mirror previous one. C to D mirror A to B in distance. What does that mean? Meaning that AB equal to CD pattern. You get what I mean? Have you still remember AB equal to CD pattern, guys? Guys still remember? Everything I teach you, right? if you follow me, I like to kind of combine to the previous section that I shared with you guys so you can remember. You guys still remember? Yes or no? Yes or no? I show you. Yeah. Oh, some of you guys still remember. Okay. I show you, right? So what is AB equals to the CD pattern? Okay. If C retrace 61.8%, what is D gonna look like? D is gonna ending with what? What number? You guys still remember? You guys still remember? You guys still remember? Okay, right? Let's look here. Talking about like here, right? AB equal to CD pattern is gonna use a Fibonacci projection as well. You can use that as well. Okay. So they will say that if remember guys, if C retrace retrace 61.8%. 61.8%. BC extension gonna be if you always say like that, you will remember. If C retrace 61.8%, BC BC extension, which is equal to the D point, it's gonna be 161.8%. How? Here. Or 100% protection. Yes. I'm gonna show you guys. Okay. This is very useful. Okay. Some of you guys just trade with the pattern like AB equal to CD pattern. That's enough. Let's say here. Let's just say here daily trades. Okay, here. Daily trade 61.8% is close to, I'm gonna assume that daily trade 61.8%, right? We have A, B, and C. So one is a AB extension where we're gonna project that's gonna be 161.8. So D is gonna be somewhere around here. Okay, somewhere around here. Or 100% projection, 100% projection, which is A, B, C, and then you get D. Here is 100%. Boom. Here. Here. Right, guys? Here. Also 100% projection, which is where this is what this mean. CD mirror A to B in distance. Okay, guys? You get it? So, what if, do you remember? What if C retrace 78.6%? What is D gonna be like? What is D? D gonna ending with what? Still remember, guys? You guys still remember? You guys still remember? Yes or no? If C retrace 78.6%, what is BC extension? You guys forget, you see? You forgot. Okay. If C retrace 78.6%, BC extension equal to D leg gonna be 127.20, equal to 100% projection. We can try together. Just now I have, right? Is this 127? No, 78.6%. Let's just say here is 78.6%, okay? BC extension 127 is here, the target, okay? And projection A, B, C to project here 100%. Boom, off. Here. Where am I? Again, no. I confused. Okay. A, B, C, 100% is here. Similar, close to, because the one is slightly higher. Let me find exact 70, 78.6%. Maybe here. Too low, too low, too low, too low. Mm. Okay, maybe I try here, okay? Okay, no, this is above, not just the, find the example. It's really hard to find 78.6%. Oh, I have 78.6% in H4. In H4, we have retrace here. Let's just say 78, let's just in this one, right? 78.6% slightly. So if I want to project, this is going to be the long term. My thing is going to be where 127 is here. Is here. So this is going to be my ABC. Okay. 127. And then use projection. A, B, A, B, this is the C. You're going to take B somewhere around here, going to be the zones. Meaning that, remember, I say that we still have the below here. That haven't closed. So this one is look like A, B, and C. 100% projection 127 and 161.8 projection. It will somewhere around here because here we have 100% projection and we have the extension 127.20. So this is going to be the next zone, the next potential zone, somewhere around there. Okay, guys. Okay. Okay. The projection, Fibonacci projection level, we have 100%, which is equal A, B equal to CD pattern, right? This is the baseline projection, most common reaction zones. If price go below 100% projection, the extended move gonna be 127 and 161.8. Okay, so this is very strong. It's similar to Fibonacci extension and Fibonacci extension 127 and 161.8. They use the same numbers. Okay, but it's just that Fibonacci projection you need to find A, B, C to get the D. Okay, for extension you need 2 points only. Okay. So how we going to project step by step? First, you identify the AB, look for the strong impulsive move, right? Like impulsive move here. One, you have the swing high and swing low, or the recent high and the recent low. Then you're going to identify the C, right? B to C, what you need to use. You use Fibonacci retracement for the clear retracement or the pullback. Okay, so the commonly 30.2 to 61.8%. Okay, why we don't use 23.6? Because the one is just small pullback. Okay, that's why you can do 30.2 to 60%, 61.8%. But sometimes if there's a deep pullback, it's gonna be 78.6%. Okay. After that, we have A, we have B, and then we identify C somewhere around here. After that, you're gonna project by using Fibonacci 2 from A, B, ashore to C, and then mark to get the D point somewhere around here. Okay, 100% or 127 and 161.8 somewhere around there. Okay, guys, continue. Any one of you guys have used Fibonacci projection before or never at all? You can share with me, okay? I use all the time. Okay, Fibonacci projection, retracement, and extension. This is common mistake. The wrong approach. So use Fibonacci projection randomly without clear structure or confirmation. You need to look for the clear structure A, B, or the zigzag, something like this. Okay. Basically, look for the trending market. You can do Fibonacci projection. Okay. Correct approach, clear trend direction, clear structures. Okay. Obvious A, B, C pattern or zigzag. Right? So this is what price make the higher high, higher low, higher high, higher low. Okay, clear structure. Confluent present could be if this one break this one resistance, right? This is the A, B, and C. If they're gonna break or to break here, you can use the projection, meaning that what if price break above this resistance? What is the next move? Then you can use Fibonacci projection. Somewhere around here, if you use Fibonacci projection, over here it might line up with either resistance or supply zone somewhere around here or OB. Okay? Projection for Projection is for planning, not predicting. Okay, it's for planning. Okay, I think to me sometimes I use that for like prediction as well. Like what if price move beyond what is the next move? Then I can have a plan. I can use for like planning to put my stop loss below above or if hits my stop loss likely if price go to that level. Okay, I wait for the rejection. I might want to sell something like that. Okay, that's the plan. Price will go there, not will go there, not will, right? It's maybe, not will, right? Prediction mindset ignore probability lead to overconfidence and poor risk management. So you should have the mindset like if price reach there, I will react. What you gonna do? That is your plan. Okay, that's why for the planning mindset, use level at a trigger, preserves objectivity and execution discipline. For example, pull out the, I'm gonna pull out here. Let's just say look for the current market. I'm gonna remove everything. Okay, so right now here, right? We know that somehow price like break below this kind of resistance level. We just put somewhere around here. Okay, let's just put around here. But right now we know that price is kind of ranging, being sideways. Right now, we already see that there is we have the A. I think I type better. We have like A here. Right, then we have the A, B. Right, what we do? B, okay, B. And then we have another C here, right? This is our plan. So we have A, B, C. I'm gonna use the daily trace. How many percent? Let me see first. 50%. Projection. Okay, right? First projection, I'm using 61.8%. They kind of retrace here. Next move, 78.6%. If we're gonna use 100%, meaning that this is gonna be the likely that price, the plan is here. If they go all the way here, which is make the big zigzag, A, B, C, and D, 100%, right? Doesn't mean they will go down here, okay? They might make a pullback first. Okay, they might make a pullback first. But right now, gold is being sideways, okay? Being sideways in H4. So if they break below this level, okay, in H4, 100% projection is going to be here. What about if we use Fibonacci extension to find the confluence zones? Okay, confluence, which is from B, C extension, where? Here. BC extension is where? So this is going to be the potential zone if that price could, because now they are being sideways. From here, they might just all the way here. I don't know. Or maybe they just want to push all the way up. I'm also not, don't know. But potential, the zone, like, okay, price might, I just say might come to this level. Okay, but once we have extension, if you're going to use the extension, meaning that you want to sell, right? This is going to be your target. TP1 and TP2 is going to be here. Remember, you use Fibonacci extension for your take profit or exit the position. Okay, conservative here 127, extended 161.8, and then we have 100% projection somewhere around here. And then we look to the left. It is near any like a key level. No key level here, but in H4, we can look for the I'm gonna leave 127 here. Okay, right? Meaning that we have the 78.6% projection. So this one, if they break out of this box, potential one, it might come here. And second, if the break below, go to this level in H4. But right now they are waiting, right? Because they are being sideways. They might wait for the FOMC later. Here. The first one, they are kind of bounced from where 61.8% projection. This is 78.6% projection. That could be somewhere close to extension 127. And this quite a bit potential zone because why? We have also demand zone here. Exact a demand zone. So you mark out this zone. So if price break this level at where the about 47.74, you wait for the pullback you sell somewhere around here. If the break below, pullback you sell, you target, you can see that on your left, this is my like kind of support level also. This is also my support level for 49.30. And then we have extension 127, and then you have 78.6%. This is going to be your TPE price close below 49.78. 49.78. Okay, 49.78. That's going to be your take profit. All right, guys. You get what I mean? Okay. I see the question. All right, so this is the plan. But if price close above the box here in H4 with the body close above, what are you gonna do? Then you close above the next move. This is gonna be the second resistance. This could be the first. Okay, this could be the first. Okay, guys. So far, okay. Can you guys hear me? Why it showed me that I need to turn up my volume? Check on the app. What happened in app? I'm checking on my app. Vantage app. Okay. I think it's the website down. I mean the app down. I cannot check here. Can you guys hear me? Oh yeah, yes. Okay, I continue. Because I think Vantage app I think something wrong because it keeps um like loading. Okay, so I will continue, okay? So here you mark out this zone. Okay, this gonna I'm gonna keep this zone as well. Okay, so right now what we need to do, we just have to wait for price to close below target here, meaning that if price come here, okay, you can buy. You can buy maybe tonight, maybe later. Okay, FOMC price might come here. We may see the rejection from here. I don't want to say like 100% confident, but I kind of high probability setup because we have the demand zone here. We really impulsive move this candle. We have extension 127, and then we have projection 78.6%, somewhere around here. Okay, somewhere around here. Okay, continue. Yep. Okay, combining with structure. So first, we're going to combine with support and resistance or demand and supply or the OB just now I show you guys, right? And we're going to combine with trend direction. Okay, projection only valid in direction of the trend. So right now, in H4, okay, in H4, right? In H4, I would say that the is a bearish. Okay, it's a bearish in H4 time frame. Okay, why? Because price make the lower low, lower high. Okay, high, lower low. We can break out this and pull back. See, lower high, lower low, break below this level. Now, either want to go back, pull back first, or do you just want to continue from C and then here? Because right now they are being sideways. They're just being sideways right now. Oh, okay. Second, with the previous high and low or liquidity zone. Liquidity, you can just look for a lot of weak, a lot of rejection. Then we could consider that is a liquidity zone. Like here, projection on the you go to H1. In the H1, uh, okay, in H1, this level, right? Before this level, anybody can buy it. This one, it look like head and shoulder, right? No, sorry, that's too far. Like before that, your price make a lower low, lower high, lower low, lower high, right? And they might make here and go back up here. It look really beautiful. A quick one, right? Left, head, go back, and the right, go here. Okay, somewhere around it looks similar to here, right? So on the top here, and then you can see this is resistance breakout because of this cannot H1 breakout. That's why this zone you mark out. Okay, there is no liquidity, but at least they have the OB here. So we have OB here. Okay, liquidity zone. So they will say that the key idea is that confluence equal to high probability setups. Trade plan example. So now, first, you're going to identify the market first with the price on uptrend, the market on downtrend. After that, pullback complete, which is at C. So right now, okay, if I want to hold my sell entry, okay, my sell entry, if you want to like hold the sales, if you want to sell in here at C, right? Because this one retraces about 78.6%. Okay, your TP1 is gonna be where here. Your TP1 is going to be at 49.30 because you are swing trader. Okay, that's why from here move, price sideways you can hold. If you want to short in here, this finally, if price break below this, your target. Okay, this is your target. And after complete C, entry near C point, where? Since here your entry where you already you enter at here at the OB here, right? Price ending retrace 61.8% in H4. You see your belly engulfing candle, price pull back to your OB, right? So this is your sell entry. And then it's complete C, right here is a C. So you hold, correct? So you hold. Okay. And then the TP1 where 100% projection, which is equal to the move, and TP2 161.8 for the extension. So TP1 where? Basically, you already hit your TP1 where? Here. Is it hit your TP1? Do you think? Oh, okay. TP1 is here, though 100%. TP1 is here. Projection. Projection is here 100%. And TP2, they are aiming where? All the way, from, let's just say from here to here. To here. 161.8, which is where? Where is that? That is the support level here, somewhere around here. Support level for daily time frame, right? This is how, if you were to look in D1 time frame, in D1 you can see price make a lower low, lower high, and the weekly time frame, remember that we're gonna look for the sell entry this week, okay? But why we're gonna say we need to wait for price to pull back, okay? So if 100% projection there to 161.8 is somewhere around here. Okay. So, uh, let me see. Right? Do you think they're going to break today? About for gold. Okay, based on this, first I want to aim, okay, my personal, okay. I want to aim here for TP1, but if you sell in here, you can hold. Because why? Structures weekly, last week bearish, okay. This week we look for the sell entry. D1 also structure, short-term structure, it make a lower low, lower high, it still sell. Okay, in H4, if you hold here, okay, if you hold here, TP1 done, aim for recent low is here. If price is pull back somewhere around here, for example, at the second resistance, because we have the OB here. You say, hey, Peggy, can I sell again as a 5046? No, I won't sell because that one might be considered liquidity. You might clear liquidity because if you trade with support and resistance, that sometimes they will clear your resistance. Okay, maybe third time might clear because above resistance there's a OB. They might just go back to the OB, okay, to take the remaining order, okay, and then before they falling. So if they go back up again here, Peggy, can you sell? I won't sell. I personally won't sell. Okay, because I trade with support and resistance. Usually I trade 1 to 2 times. If go back again, I don't trade because why? If price on it testing the resistance 1 to 2 times, they're supposed to just from resistance they need to go like to the support level, right? But if like testing, falling a little bit and then go back testing again, meaning that they might go to OB if there is a OB above, resting above the resistance level. Okay, that's why if they go back here, I don't trade. I will gonna wait here. Okay, but if from here they're falling, that never mind because I set my rules. Okay, but right now it seems like they're going to break now in H4. They're falling very strong. Very strong. You look in the M15. This is the M15. So now the retail trader, right? They trade in the lower time frame. M15 you can sell. By right M15 here you can sell because you see the rejection. This is your TP. From here, somebody might want to buy at this OB, but I won't buy. Okay, I won't buy here. You'll see that. But in H4, likely they might want to break. If H4 closing with kind of, rejection, you see that, you see this. Okay, up, down, up, down. You look at M15, okay. From here, buy, from here, sell. right? This M5. But in the bigger picture, will look like here. So what you're gonna do if you have the sell entry, you hold. Okay, if you don't have any position, you wait for price to break close below with the body close below 49.78 or 75 body close. Lower time frame pullback, you can sell. If you don't have any order, you wait for buy entry at this level, which is 49.30 to 49.07. The zone is big. So you need to wait for price to come in the zone, wait for the rejection, and then you buy. Okay, but this is our plan. This is setup. I'm going to show you. Then we use the A, B, C to complete if this going to be D. This is for the swing trade. Okay, not for the day trade. Okay, not for the day trade. All right. And now it's falling so strong in M5. Oh, see, anybody short at this level? This was the sell zone. Then now it's falling. This is M15, okay? Almost 200 pip. It's okay if you did not get. We wait here. All right, we wait here. Okay? You see that TP2161.8 strong trend target. Why? Because in H4 is a bearish, short-term bearish. Okay? Also, I think I'm gonna see that gonna pull back because why? If we look at the history, remember we look at the month, the year, which is 2022. There's a Ukraine war, something like that. March 2022. Here, you see that March, right? Which is where? At somewhere around these zones. And before that, after that, you see that price pushed the all the way high, right, in March, and after that they start to selling off, and then you can see that April, May, June, July, August, September until October. How many months? 1, 2, 3, 4, 5, 6, 7, 7 or 8 months. Okay, that price is falling before they continue, which is in November, going up again. So similar, there is an event here, which is the war, Ukraine, right? And 2022, 3, 4, 5, 6, 4 years later, same. In March, right, we started to have a war, correct? Which is here. Starting in March as well. So you may see price closing with the bearish because before the event happened, right? The investor have to keep buying gold, right? So now they sell off where? They're selling gold because they need money to buy oil, to buy whatever they want, right? That's why one could be buy dollar and use dollar to buy oil and use dollar to buy whatsoever. That's why it doesn't mean like whenever there's a war, gold will be expensive. No, because why? We buy at the rumor and then we sell at the actual event. Okay, there's a rumor that's gonna have the war, right? So that's why you keep buy. So at the point there's event, they sell off gold because they want money to buy their things, buy food, buy whatsoever. Okay, this the logic. Because I have a lot of the trader asking me why there's a war but gold is not go up. Why you buy gold at the in when there's a war, right? No, right? You're gonna definitely sell gold because you need money or you use gold to exchange for other thing else. Okay? Okay, continue. So when projection fail, so slide 11, so know the limitation, weak trend. So you cannot use the projection with the sideways market, okay? Which is right now in H4, there's a sideways we're not going to use because if we're going to look in the bigger picture, we have A, B, C, they're going to complete D leg, okay? Fake retracement, shallow pullback that reserves quickly, structure is false, so no fake. How to identify the fake retracement? How are we going to identify that the fake retracement, guy? To be honest, I'm so not sure. fake retracement, okay, meaning okay, I think what that is that price is not, I mean, the body is not close below the key level, okay? That's a fake retracement, like the body is not close below, not close below. So if you're gonna use Fibonacci retracement, for example, it is messy. I'm gonna do something like that, but you're gonna draw again, I'm gonna show something here. Mm. Mm. Okay, let's just say use the retracement, which is okay. I have a question. Where can I draw retracement, guys? Can I pick this high and I pick this low to draw Fibonacci retracement, or I'm wrong? I draw from this swing low to this swing high. Anyone? Anyone? Okay. So I'm going to draw from here to here. In H4, they retrace 23.6% because they're being sideways. I go to H1. Okay. So now in H1, you ask me, Peggy, there is a OB here. Can I buy? I don't buy. Okay. I already hit my target for today, so I don't buy. So if you buy, yes, you can buy if you want to. If you want to buy here, you ask yourself first where your stop loss. If you buy here, where your stop loss? I can tell you that if you want to buy here, which is where this is 100%, 100% retracement, right? Starting point. You see that there is an extension below. So if you want to buy here, you need to put the stop loss below 127. You don't put here because you can see below you have extension. Price might come to hit or reward extension of 161.8. So you need to ask yourself if you're gonna buy here, where is your stop loss? Not how much you want to earn from this trade. Okay, because now, right, meaning that if you put below here, meaning that if price come like somewhere, this is the flag breakout, clear stop loss, this one, right? Boom. But if you put the SL at this week or below this week, price come, you won't hit the stop loss. Okay, if you refer to the previous swing low, you're gonna hit stop loss based on this. But if you want to buy here based on the OB, the stop loss had to be low, the 127, but I won't buy. Okay, because price is being sideways. I wait. Because to me, I look for sell entry. Okay, I look for the sell entry. So you see that this is the OB. If this one closing also become your bearish OB, so how? You need to make up your mind whether you want to buy or you want to sell or what you're gonna do, or you just want to wait. Okay, but I can tell you, yes, this is the OB. Okay, you go to M5. Can we buy? This is your zone. Your zone in where? Your zone in here. Your buy zone in here. You said, okay, I think I can take risk. You can buy here. You stop loss put below this swing. Or put at this swing. How many pip? Let's say you're in 3 now. Your stop loss, oh, it's about 200 pip. I won't buy. You make up your mind if you want to buy, okay? Probably may bounce because right now they are just being ranging, right? They are being sideways right now, okay? So, a new driven move. So fundamental volatility break, technical structure, unpredictably. So this one, so whenever you do the setup, plan your setup properly, right? And there's a new coming up, you should cancel your setup first, and then you wait for the news to be released, and then you see how like the market react to the news. Okay, usually I will cancel my order if or my setup if there's a new coming up in 5 minutes or 10 minutes. Like they are, for example, they are approaching my level. Okay, but then there is high impact news. I will cancel and then I will sit back and I wait. Okay. Any questions, guys? Any questions? Okay. Add one insights. Okay, I have one more slide to finish. Okay, strong trend. So often hits 127 or 161.8. Impulsive A, B move. Shallow retracement 38 to 50%. Fibonacci retracement, strong volume confirmation. Then you're gonna aim for extended target, which is in H4, right? In H4 here. No, this one is retraced 78.6%, but now they mean sideways. Never mind. Okay, but this one is say shallow retracement, but the one that we aim here, okay, they are retraced 78.6% somewhere around here. No, not 78.6. 50%. It is 50%? Somewhere slightly above 50%. 78.6% is here. Is here 78.6%, which is at this. If this is gonna be the big A, B, C, and D, this is 78.6% retracement is there. Yeah. Weak trend struggle to reach even 100%. Shopee overlap moves. Deep retracement 61.8% flat or 70 or even like 78.6% up to low volume on impulse. Target 100% conservatively. Okay, so key takeaway today, this is going to be my last slides. Okay, so Fibonacci projection measure the next wave after a retracement complete. So A, B, C, and then we're going to project to the D. Okay, the ABC structure is foundation of A, B, impulse, B to C, pullback, C to D, target. All right. Key level 100% baseline 127.2 extended 161.8% strong momentum. Only use the clear trend, clear structure, and confluence. Last one is the planning to react to the level, never predicts them. Right? So this is we are never predict, but this is the close to our level, which is where here, right? We have here OB. This is our level, and this is also my support level. This is my support level. So this is my support level. Okay, and then there's a 127 extension, 78.6% projection, 100% projection here, 161.8 extension. So this is going to be the zones, this level. So we have two zones somewhere around here, right? So if they're still falling, it look like the A, B, C, and go D. Where is my D here, guys? Where is my D? Oh, did I delete? Okay, we're gonna see if this one is gonna be correct. Okay, so guys, that should be all for today, guys. Thank you so much for joining me today. Any question? If not have question, I'm gonna see you guys again on this coming Monday about like transaction. Okay, guys. So happy trading, guys. Have a good weekend ahead, and see you guys again on next Monday, guys. Bye bye and take care. Bye.